Namaskar everyone. Welcome back to another live of Thursday 7 p.m. live on YouTube and Facebook. So if you're new here, my name is Aditya Soma. I'm a real estate investor and real estate realtor, real estate agent here in Windsor, Ontario. Basically, I believe in achieving financial freedom through real estate, and that's what I talk in these lives. Different topics related to real estate. So if especially today's live, I'll be, I would like to touch on some really important things that's going on, like lot of news going around regarding interest rate hikes. So I thought, let me give my point of view and also like shares how it's going to impact on, on us on real estate. Um, and share some market updates, what's happening in Windsor, Ontario. So if you're interested in all those topics, so please join and let me know where you're joining the call from. I would like to say hi, introduce yourself, and any questions related to real estate investing, real estate sales, anything I can help you with, don't hesitate to ask, because I strongly believe only way to grow in life, especially when we are working for our goals and for our personal dreams and everything. Sometimes there are few little questions that can stop us from achieving our goals, but if you can ask them, either me or someone in the group can answer you those questions that you're going through. So don't hesitate to ask the questions. So I see. Hello, brother B14. Hey, brother, how are you? Tarun, hi, Aditya. How are you, man? Doing fantastic, Tarun. So, before I jump into the questions, let me just, quickly share what's happening in Windsor, and then I'll definitely, I promise I'll do my best to get to all the questions. But let me quickly share what's happening in Windsor, Ontario, because, the data is what has to drive your decisions, not the emotions. Because especially I have seen all these years, the news is always negative. A lot of negative news out there, because the media wants negative news, and they want people to be in fearful and all those things, whereas real estate investing is actually driven by data. What's the numbers? What are you looking at? So that's why I do these lives, to help you educate on those. So let me quickly share my screen and give some data on the current market update. So let me share my screen here. And you can tell I'm not that savvy. That's why I'm juggling between my windows here, just to get on live. So while I'm trying to share the screen, I'll answer some questions here. Hey Jeg, how are you? Hi Aditya. Average prices of pre-construction in Windsor. A lot of love from Punjab. Your videos are fantastic. Thank you, Jeg. Thank you so much for the love. The average prices of pre-construction. So I gotta ask, like, what type of pre-construction you're referring to, because there are pre-constructions in condos, pre-constructions in semi-detached, pre-construction in detached. So if you're referring to condos, generally we are looking, for 1,000 square feet, somewhere around 500,000. So you can do the math, like it's around $500 per square feet. That's again on a rough numbers that I have seen in recent times. Semi-detached, again, for 1,500 square feet, they are going somewhere from 750 to 800, 850, depends on like how luxury it is, how good size and all those things. For detached homes, as single family detached homes, again, in recent times I haven't seen much under 950, because there is very I think I only saw one pre-construction that was under 950, that was like 1,350 square feet in last couple of weeks. So I would say, give or take, at least the minimum you're looking at for a detached home in and around Windsor is like around $1 million. So Again, I'm still struggling here to share my screen, but I promise in a second here, I'm gonna pull up. There you go. So hope you guys can see my screen here. So if you're looking at my screen, you all can look at this data for yourself as well. So I just want to quickly touch on Windsor real estate market. So I put the link in the chat. You can also go through it. Again, like I mentioned, your decision has to go through based on the data, not the emotions. So one thing I noticed, like, because we've been hearing the rate hikes from last, like, I think February, and this is the stats for March. So the full March year. So we are in the beginning of April, and this data is for March, the whole March month. So in March month, like I have talked in the last live as well, the last market update, the inventory, the number of new listings on the market is going up. So even in March month, also there is a 15% increase in the listings comparative to last year. So which is a good sign, because the one of the biggest problem, that the reason we are seeing, problem or like challenge, I would say, we are seeing is like the inventory is low for last like 2-3 years. So this is a good sign. We are seeing the inventory start to go up, and the property sold dropped by 5% because the inventory now increased. So the number of properties sold in that month actually decreased comparative to last year in the same month. And you look at, this is a big aha moment for me. Like, even comparative to last month, the price, average home price, has gone up. This is like insane. So the property prices are still going up as of now. Again, with the news coming up, what's going to happen, we'll talk that in a second, because I have those tabs also open. I try to pull up some data on what how many rate hikes can happen and how it could impact. But again, this is what I'm seeing here. And let me quickly jump on to a detailed report, because you cannot just come to a conclusion by looking at this data. So there is a report there. You can jump into the detail one. So let me pull up that report here in a second. So here's what you're seeing. This is the full detail report. Now you can see the market activities that we just talked about, the number of properties listed, or in March month were 1050, whereas in last year it was 900. So that inventory has increased by like almost 140 more properties on the market. Same thing, market activities up year to date, right? This is for the specific March month, and this is for year to date. Like, so how many listings were there from January till today in this year and comparative to last year? And you can go dig more into it. So sales comparative to March last year and March this year, the sales are down by 37 properties. And you can dig more into the data. Just if you keep on going, like average prices March, just comparative to last year March, this year March, you can see the differences here. So you got to dig more into the data. The more you dig in, you will get an idea on what's happening. So just to summarize, like to keep it in a layman terms for you guys, what I'm understanding from this data is the inventory is slowly going up. The prices haven't changed. The prices are still continuing to go up, because that shows me that there is still more buyers in the market. And even though the number of properties has increased, and the number of properties sold is not that much different, so there is still properties sold way more. So that is a sign that tells me still the market is still hot in Windsor, because I know I've been hearing in GTA it's a little bit different. In GTA they have seen, they have seen there is a price drop, but in Windsor I haven't seen it. So if you keep digging more into the data, you'll find more details like median price year to date. And this is one interesting stats I want to talk to you guys. because a lot of people ask me like, what is the price point you can get a property for in Windsor as of now? So if you look at this data, this is for what price range the residential properties sold and how many properties. So for March 2022, there were 414 properties that are sold in the price range of 420 to 550. So this is a good sign, guys. So that means still there is good amount of activities happening in this price range. And so that means you can still find properties even though the average home prices in Windsor are 750, 723, but the amount of properties sold in the low price points are actually pretty high, below average price. So the average price was 723, right? So if you look at the data, the amount of properties sold 400 and 417. So the majority of the properties are between 700, like, so from bottom 420 to 700. So again, guys, you have access to this data. I put up that information in there in the chat, so go through it. This is something that very, very crucial to understand, like what can you find, what is the majority of the inventory. So out of 1,000, let's go back here, out of the total properties sold this month, the majority of them actually fits in this price point, under 700, above 420. So that means if you're looking in that price point, there's a good chance you can find properties here. So if that's the something that you qualify for, if that's your range, then good news for you. So again, this is just a quick update. Let me know any questions in the comments below. Again, I thought I'll first quickly jump on the stats, so even you can go and read those stats for yourself as well. So let me go with some questions, and then I'll jump onto the interest rate topic here. I'll stop sharing the screen here so that I can answer some questions. So the next question, Tarun. Hi, Aditya. How are you, man? I'm doing fantastic, Tarun. Thank you for asking. Hope you're doing great too. How much does bidding war have gone down for 3-bedroom plus unfinished basement detached homes near university area as of today market, considering current mortgage rate hikes? So again, that's what I was just showing the data, right? So it's what you're asking is very specific, 3-bedroom plus and unfinished basements. It's hard to look at that data. Honestly, I have to go on to the metrics and do those data analysis, but I can talk in general. So what I'm seeing from the stats, the market stats for March month, there is still the demand, but I can tell, from what I'm seeing, if there are like really nice properties in a clean condition, they're still like, sometimes even hard to say exactly, but we're seeing like from 60 to 70% of the properties on the market are still getting over 3 or 4 offers. Definitely the number of offers on a property has gone down. I can tell that for sure, because most of the properties that me and my agents have offered in last month, we have seen like, only the nice residential homes where, not the investor one, more like family homes, those are the one having a lot of offers. But mostly investment properties, definitely the number of offers has gone down, but just because of the prices have already set with the comparables and all, so we haven't seen the prices gone down. That's what you just saw in the market stats. The prices actually went up. So the number of offers definitely gone down because the number of buyers were so much, and because of the interest rate hike and the changes in the qualification for the mortgage with the interest rate, the number of buyers has reduced. And also the add-on, if you guys have seen, the last live I did about that foreign buyer tax. So there is a 20% foreign buyer tax for anyone who is not permanent resident and Canadian, like Canada citizen. So for those people, they have to pay 20% tax, actually 20% on the price. So which is like significant. If you're buying a 500,000 home, you have to pay 100,000 just as a tax if you're a foreign nation. If you're on work permit, And again, you might qualify for a rebate of that 100,000 if you get permanent residency within 4 years. But even then, for people who are just came to Canada recently, who are on work permit, those are the one now cannot buy, because they have to pay this extra money even though they qualify for rebates. But what does that mean? The number of buyers definitely has reduced a bit, not significantly, where the properties are not staying on the market for longer, which, to say probably what I have seen, maybe 20 to 30% of the properties are taking longer to sell. So before, the average sale time in Windsor was like less than 3 weeks. Now probably still 60 to 70% of properties are still selling in that 3 weeks, but there is like 20 to 30% of properties are selling over 3 weeks, so taking longer to sell. So you being an investor, so now you have to look for those motivated sellers who are like, who are in a pressure to sell the property so that you can get a good deal if you're an investor. And if you're a seller who is trying to get the maximum out of your investment, now you have to work with a good realtor, in whichever the city you're in, have a good one on your team who can market the best out of your property. Because now, when it's like too many buyers, when there is too much bidding war, you don't have to market the property that much, but now you have to market the property very well to get the best returns. So that's a not so quick answer, but that's my answer in short. Going on to the next question here. So which possible other lenders, B or C, would be able to give mortgage for buying second home if we put 5% down in Windsor in student area? So first of all, let me pause you there. If you're looking to buy a student rental, first of all, getting a mortgage is challenging. And that being said, if you're looking to buy a second home as a student rental, getting a 5% down is really tough, because you gotta prove to your lender that this home is going to be your home. Especially if you're buying for investment purpose, forget it. You cannot get for 5% down. But if you're buying for your personal use, even though it's a second home, if you're buying for your personal use, then only you will qualify. You have to prove to the insurers, the CMHC or Genworth, that your intentions are to move into this property. So that's very thin line. It's and especially if you're looking at a property, if you have a beautiful home somewhere, let's say in Lakeshore or in Toronto, $1 million home, and now you're saying to the lender that you're moving into Windsor near university that has 5-6 bedrooms, do you think the CMHC gonna believe that? Man, they're pretty smart. They're very smart. So don't think that would be possible. So trust me, from what you're asking, Tarun, again, this is my brutal honest answer. The chances for you to get 5% down for those type of properties is very less. I would say close to impossible. So moving on to the next question here. Ujjwal, bro, first time home buyer saving tax in today's budget. What? Saving tax in today's budget. Sorry, Ujjwal, you got to be a little bit more clear with your question. I didn't get what you mean. But one thing I'll tell, if you're a first time home buyer, if you want to save taxes and still get the money for down payment, one of the best way is RRSP. Utilize your RRSP. As a first time home buyer, you can utilize the RRSP. So how it works is, if you have a RRSP, let's say a limit of $25,000. So how do you get the limit? Check on your CRA website. It will tell you how much limit you have based on your income. You have a limit there. So let's say you have a $25,000 limit. Now you pay that 25,000 towards your RRSP. So you have to open RRSP account, all those things. You can talk to your bank. Go talk to your bank. They'll help you with that. So let's assume that this year you made 100,000 and you want to pay that 25,000 towards your RRSP. So that's fantastic. So now you can do that. You pay that 25,000 towards your RRSP. So now your taxable income goes from 100,000 down to 75,000, because the government gave you this RRSP limit. So now you can use this money in the RRSP for your first home has a down payment. So if you're using for 5% down, you can use this RSP money towards your down payment, which you have to pay back in 15 years. So, but without any taxes. So you took the advantage of the tax benefit, which you reduced your tax bracket, and you used, instead of using that directly to the down payment, you used through RRSPs. So now you saved on the tax and you still paid for your down payment for your property. So that's one way. But if your question is something different, let me know in the chat. Before I have 60K down, can I buy a property in Windsor? So there are a lot of questions need to ask. B14, please let me know your name so that I can I don't have to say B14. So first of all, are you a first-time home buyer? If you are a first-time home buyer, do you live and work in Windsor? If you do, or if you have a work from home option, you want to move into Windsor, then if you have a mortgage, if you qualify for, let's say, 500,000 home, then all you need is 5% down, which is $25,000 plus closing cost another 5,000, just a give or take. So all you need is 30,000 in that case. But if you're buying as an investment property, then you need 20% down. Then with 60,000, you can afford up to 300,000. So if you go back to the chat I showed on the Windsor stats, you will see literally, like I pulled the data this like a week ago for some client. Like there are literally under 3 properties, residential detached homes sold under 300. So 300 is a tough price point to work with. Maybe you can find a condo, maybe a 1-bedroom condo, or maybe if you're lucky, a small 2-bedroom condo, or maybe a bachelor condo, depending on where it's located, for under 300, or maybe a lot. But for lot, you need higher down payment. So, but that being said, still you have options. Maybe you can borrow another 20,000 or 30,000 or 40,000 as a second mortgage, or from family or friends, or find a JV partner, then go for like 400 or 500,000. So if it's 500,000, there is a good amount of inventory in Windsor, you can still buy a detached home. So that's what I think. Bro, under 70K, can I buy a property in Windsor? Again, I think I just answered your question. If you're talking about 70K price, impossible, because there is I just bought a lot in one of the, like a C neighborhood, rough neighborhood in Windsor for 180K. So if you're thinking of buying something for 75K price, no, but a price around 400, like I showed the data, right? So go back to check the data of the stats that I shared. If you want, I can add it on the screen once again here. Look, this data. So if you look at this data, you see the price points. So if you look at this price points, so under 300, probably you can see there is only like 50 or 55 residential units sold. So they could be condos, they could be lots, they could be, but it's literally almost like 5% of the inventory is under that price point. So you got to look at your the qualification, and you got to look at your personal situation a bit more better. Moving on to the next question. Chavdas. Jay, maybe easy for me to call is Jay. Hey Jay, is this right that Ontario government is going to close the refinance, or just rumors? What do you mean close the refinance? If that's really the case, there, like, so many Canadians will stop investing, because you know how lot of properties in the market are selling, because lot of investors who have, like, lot of homeowners who already existing homeowners have their equity in the property, and they take advantage of it. So what you're saying is, for me, is just a rumor. It's likely impossible. But again, hey, I'm not the government, and I'm this is just my opinion. I think that's really, really impossible. But hey, you never know with the government. They could change things overnight. Krunal, Hey Aditya, is it advisable to rent a house in Windsor to students or a family for two-bedroom house upstairs and one bedroom in the basement with separate entrance and kitchen? So hey Kurunal, so it really depends on your personal choice, right? There are some really good students, and also there are families. It depends on where is it located, and if you cannot find a good family, or if you cannot find a couple, because it's a two bedroom and one bedroom, right? So generally for one bedrooms you will find a couple or single individuals. So which means again they're working or students. It could be anything, right? And for two bedrooms likewise you cannot find families. For generally for a two bedroom mostly you will find like a couple, again two or three people sharing the house. Those are pretty regular for that size of a unit. But again, that being said, it depends on what's your comfort zone. I have units who are which are like two bedroom units, one bedroom units. I have rented one bedroom units for like single individuals. Some of them are students, great. Some of them are working people. Two bedroom I have rented for couples. Most of my two bedrooms are rented for couples, and actually I think two of them are rented for students who are like two students sharing the room, and one unit, specifically five students sharing two units, because they are from my same background where I am from. So I felt comfortable with them, and I strictly gave a strict warning that hey, you cannot bring more than five people, because I agreed, because you're my people. I don't want to spoil the house. The damages could cost me more. So keep that likable trust. And also I send my cleaner on a regular basis, so I know how many people living there. So again, that's my not so short answer. Moving on to the next question. And if you're joining for the first time, please let me know your name in the comments and where you're joining the live from. And like I always say, do me a small favor in return for helping you with your questions, is to hit that subscribe button and share this channel with anyone whom you think it's helpful, and anyone who is looking to sell or invest in Windsor or buy in Windsor. Me and my team are real estate professionals here, so please do contact us for any help. So we are more than happy to help. So that's a written favor. Just send us some referrals and show us some love through the subscription. Just subscribe to the channel. Just a small pitch there, marketing pitch. So going on to the Tarun's question here, I saw a three-bedroom plus unfinished basement property listed for 289K, which I'm sure under listed. What do you think? How much does it go for in Sandwich Town and University area, bro? That's a tough answer, tough question to answer, because first of all, if you're working with a realtor, ask the realtor to send you comparables, because I don't know the property, what finishes it is in, what is the size of the property, what is the exterior, what's the lot size, how good is the condition, how big is the bedrooms, how big is the kitchen, is it a closed or open, um, how far is it from university, where is it exactly located. So these many elements that are interconnected to give a data like what's the sale price could be. So that's exactly why, especially if you're if you're not a realtor, work with someone who is a realtor here. If you're not working with, if you are already working with a realtor, ask him to give you the comparables, because and ask him for expert advice. So because now he can spend, because it's not a short answer, he has to spend like 15, 20 minutes, 30 minutes, compare the subject property with the recent sales in that area, and come up with the comparables that are close to, and give an estimation on the value that it could sell for, and also what's the rent it's rented for. So many elements, right? So I would suggest reach out to your realtor and get a detailed answer in there. I don't want to mislead you in that topic. Hope you can hope it's helpful for you there. Moving on to the next question. Hi Aditya, how are you, man? I think current mortgage, I think we answered this question. Moving on to the next one. Dallas, I love the name. um, do you think the rate hikes are enough to cool down the market? You know what? You raised the good question. So let's quickly talk about what's happening with this rate hikes, right? Because I've been seeing some lot of articles. I'm going to touch on that, Dallas, in a quick second here. Let me share my screen once again. because I have some articles opened up that I want to just share with you guys, on what I think, what I feel, what's going on with this interest rate hikes. So here, again, I'll share this link in the chat. So let me share the link in the chat here so you guys can read through that article. But again, do it after. Just copy and put it on your browser and save it and read it after. For now, let's talk, because I'm here to talk for you guys. So if you look at this article, right, the Bank of Canada to hike rates by 50 basis points in April. So it's due for April 14th, I believe. April 13th, the meeting. So they're expecting, most likely it can go increase by like 50 basis points, because again, I read this article. I'll just give my summary. Basically what they're saying is, because they're seeing a strength in the economy is strong and employers are suffering to find employees, and the inflation rate is super high. So they, to offset the inflation rate, they think one of the way is to increase the rate, interest rate. Because when they increase the interest rate, people will spend less. So that's again their thought process behind this interest rate. So they're expecting there could be actually 4 or 5, maybe 6 rate hikes by end of 2023. So they're expecting it could go up by like 0.5% to almost like 2% up on top of what we have interest rates now. So that being said, right, like, so here, like, let's talk about like two things. One, um what are the chances for this thing to happen? um Me as being a common man, because what we are reading for almost like from last few months, the interest rates, the momentum around the interest rates, with the economy being strong, they're expecting, definitely they want to increase this rate. So let's assume that, interest rates going to go up. So there are good chances, in my opinion, there are good chances for interest rates to go up. Then the next question is for us, like, as an investors, what kind of impact can we see on us, on the market, on the real estate market? What kind of impact could it make? So here's some of the things that I feel. So one, it could definitely slow down the market, because the market has been crazy for last 3-4 years. If you've been in the market, that, like, each property is like 10 offers, 15 offers. Man, it's insane. It's not good for anyone, like not good for realtors, not good for buyers, not good for sellers. I mean, maybe the sellers are happy because they're getting a lot of demand. But other than that, like, people who are just waiting for their first home to buy, it's not good for them. So and a lot of people are, with this crazy amount of demand, they're buying because they are feeling, they might miss out. That's the, like, FM, or whatever the short form is, FMO. So fear of missing out. Because of that, and people are making some stupid mistakes because they are paying way too much than they're supposed to pay, or they're borrowing way too much money than they can handle, because they feel like they're going to miss out. So now with this interest rate increase, hopefully that kind of craziness will come down. And that's what I'm expecting, because now with the interest rate going up, now people have to be worried about how much they can qualify for, because now the banks increase their qualification criteria as well. So there are certain, like, TDS ratios, where an income to debt ratio, the banks will take into consideration in order to qualify you for X amount based on your income and your debts. So they actually increase that. Before, they used to take like fixed rate, whatever the fixed rate, and like on top of some 0.1% or something. And now they made it like, if the interest rate fixed rate is 4%, they're taking 5.2 something. So they qualify you. They are trying to be conservative so that you don't overspend. So they are qualifying you less than what you use to qualify. So which means indirectly they're trying to, slow down the buyer. Hey, hold on, you might not be able to afford if the interest goes up. So they're taking those measures. So those measures could impact on slowing down the market, which means the less number of, we should see a little bit less number of offers. We should see less crazy bidding wars. So that's what I think could impact on. And how can you protect yourself? Because that's the next question, right? Hey, the interest rate's going to go up. I might have to be like scared, worried, all those things. No, hold on. First of all, look at your financial situation. My strong advice for anyone out there who are looking to invest into real estate, number one thing is, don't buy with a fear. Don't buy because you are going to miss out. Buy with the fundamentals. Like, in whichever the city you're investing in, is the fundamentals are strong? Is the city population growing? Is the economy growing? Is there more jobs coming in? And if so, and also, like, can you have a positive cash flow? So that's one thing. And two, have a reserve funds, because this is the time more than ever with this like 5 or 6 predictions of increase in the rates. So now you got to look at, okay, what is my current mortgage? If you already own a house, or if you have a car payment, or if you have any other debts, look at how much money do you have right now, and say have some extra savings set aside. Two, don't over leverage yourself. That's another big thing I have seen. Like, people will be wiped out. There is a saying in investing world, when it's like, a lot of flow in the water, you won't see any crazy things happen. But when the waves go off, you will see people who are swimming naked. So um, this is the situation where, if in this time period, like, if you are too much over leveraging, or if you don't have enough saved contingency funds that can help you if the rates go up, if you cannot pay that mortgage, now you're in trouble. So instead of going crazy about spending on unwanted luxury car, or luxury dresses, or watches, or whatever, or maybe buying a home that, like, just because you want to show off, stop doing those right now. You got to save money. You got to have some contingency funds. If you already existing, if you have any existing debts, try to pay off your older debts. If you don't have enough income, maybe focus on making extra income. And also, like, if you already have an existing house and you have a potential, maybe if you can increase your income, maybe by doing Airbnb one of your room, or if you have a basement, can you rent it out so that you can get this extra income? So if the rates go up, you have this extra income coming in. So try to reduce your cost of living, try to increase your income, so that if something crazy happens with the rates, if it continues to raise, then you still will be fine. So that's what my solid suggestion. Like, make sure you're prepared for this. um, Even if it goes by 1% up or 2% up, and if you already have a lot of equity in your primary home, go refinance. Have access to that funds, especially if it's a primary home, through line of credit, and don't use it for unnecessary luxury like liabilities. Don't use it for liabilities. Make sure have access to those funds. If there is a good investment coming, then use it. Or if you can use them as a contingency funds for if the interest rates go up, so you can pay from here. So those are some of my suggestions. Let me go on to the questions here. Back to questions again. So, hello, is that right? On Ontario government is going to close the refinance? I think I already answered this question, which I think it's a rumor. What is the current mortgage rate? So good question. Here, I'm going to share again once my screen here, because there are some good tools that you can use. Sorry, my bad. I think I haven't shared the screen here. So once again, share the screen, tab, mortgage calculator. So this is one of my favorite website. I'm not affiliated to it by any mean. I just love to use this often. Ratehub.ca. You can read a lot about mortgages, learn about mortgages, and also you can do quick calculations about any purchase or anything you're doing. So what are the rates currently? So here you can select the rates. So you see the rates here. So these are the fixed rates. Again, it could change based on your personal situation. It could change based on different scenarios. You can change the terms here. You can always change different things. If you change it to variable 3 years term, you can get 1.4. If you change it to 5 years term, maybe 1.45. If you change it to fixed, 3.04. Again, this rate could change if it's your primary home with the insurance, primary home with no insurance, or rental property, or a student rental, or a multifamily. This rates could change based on those situations. But right now, this is the lowest you can get. But again, not always the lowest is the best. Go for average rate. So maybe like I would consider 3.64 a fixed if you're going for. If you're going for variable, 1.4, 1.8, sorry, my bad. So personally, I love variable. Again, there I have made a couple of videos about why I love variable. But in short, it gives you a lot of flexibility, and you start off with a pretty low interest rate. But again, also depends on your personality. Um, if you cannot take risk, if you cannot sleep well, if you are like worried that if the interest rate goes up by 1% or 2% or 3%, then don't go for variable. Just go for fixed. But if you're a little bit like me, who are don't mind taking a little bit of risk, then fixed. Variable allows you for refinance or sell. Generally your interest rate is only 3 months rate, 3 months interest always. So going back to answer the question for someone, in short, this is the interest rates you're looking at. And also play with this, right? Like calculate your interest rates based on what if, one second, looks like my website here is slowed down. So play with this interest rates to see what if whatever your interest rate is currently, and change it to 1% plus, like change it to, let's say, 5%, and see how much your monthly payment will change, and then make a decision. Then save that much amount of money so that you don't get into trouble if the interest rate goes up. And also you can change your amortization if you want to bring down your interest rate. So you have an option for 25 years. Generally I go for my investment properties 30 years, so that my mortgage payment is a little bit less and I have a little bit more cash flow. So play with this website. You will have a good idea on what's your payments are. How can what can you expect if your payments, if your interest rate go up? What can you expect, which each lenders are offering for variable, for fixed, and all those things. And there are a lot of good articles on this website. Here, let me navigate here to show you guys. Mortgages, investment banking, more blog. So go into these blogs. They're very good blogs. Like, they're different, 7 tips to get approved for a mortgage, canceling your car insurance, best home insurance companies in Canada, is it illegal to not to have a business insurance, do I need a business insurance? Like, a lot of articles, really, really good articles. I spend time on reading these things personally, because you go to school, study for years and years to get a job that can help you make $5,000 a month. Then if you want to make a financial freedom, if you want to make $5,000 every month for your lifetime, then how much education do you have to put into it? Think about it. You got to put a good amount of time to learn. And that's what many people try to take a shortcut. Hey, real estate is not a shortcut. If you are looking for shortcuts, maybe go build a software tool, or sell it to a big company, those kind of things. But if you're looking to invest, and investing is a slow game, it's not a quick game. It takes time to build a good portfolio. It takes time to learn a lot of shit. Like, so don't mind my words there. So that's my take in there. Going on to the next question. I love the question so far. So, guys, if man, I see there are like 50 people live, and I'm not seeing that many questions. So don't hesitate to ask the questions, guys. One way for you to succeed in life in general, with investing, with anything, is by asking questions. Because pretty much, personally, I grew up in a family, like in back home in a small village, where I used to get beatings if I asked questions. So that's why, like, that was one of my subconscious pain, where initially few years ago, I was very hesitant to ask for help, ask any questions, something the challenge is going in my mind. But after coming to North America, after coming to Canada, one thing I learned is like, heck, people respect you if you ask question, if you don't just assume blindly, and if you don't know something, you just ask, because by asking you get a lot of things done. So trust me, ask. Don't keep in your brain, don't let your brain get stressed out by keeping it overloading in your brain. So moving on to the next question. Mohammed, hi Aditya. How are the interest rates will affect the pre-construct market in Windsor Essex County? Again, like I said, in general, right? Excuse me. Let me take a sip of water here. So, in general, the impact will be kind of same, right? Like, so if you have already purchased a pre-construction, so now you have to think, what price did you purchase for? Is the interest rates with the new interest rates, if you have locked up the interest rate or not? Make sure, maybe look into that. And also, do you qualify for the same amount? Because you might have a different expectations when you purchased, and with the interest rates going up, with the qualification requirements changing, look into, talk to your bank, talk to your lender, and maybe start preparing yourself. If your pre-construction closing coming up, like let's say in 4 months from the down the road, you start now. So that way you don't get into trouble, you don't sell it with a stress, so that you can close the property. So it could impact definitely on the pre-constructions as well, because it's in general, it's all real estate. So, and you have to get the mortgages, you have to get some x amount of mortgage, your qualification, everything depends on the rate, right? So yeah, definitely take a look a little bit more deeper into your personal situation, and then ask question even more specifically what situation you're in currently, and how it can impact you in that situation. Moving on to the next question. Jane, hi Aditya. Any update on Calgary and Edmonton market, considering that interest rate increasing in interest rate? You're planning to go to Calgary. Is it going down considering the GTA investors will be back? Good question. Loaded. Love that. So first of all, I was supposed to go 2 weeks ago in the weekend, which I couldn't make it due to some personal reason. But I'm still planning to, probably by end of this month. I'm still working in progress on that, and I still feel like Calgary has potential. Still, I'm still. I don't have 100% answer. I don't want to personally. I don't want to give half of answer. At the moment, I'm seeing a lot of good things happening. Like, there are new jobs coming in Calgary. There is population growing slowly. Definitely with the the oil prices going up right now, that's actually impacting Calgary positively, because they are heavily dependent on oil. But along with that, with the inventory, with the prices still being like affordable for a lot of people, so the population is growing because of that. So we got to pick right neighborhoods in that area. So for that, I was like planning to fly there. So I would definitely say, talk to some realtors and some investors who are already investing in that area. So that's what I'm doing. I'm talking to a few people who are already investing. One of my friend, um, he already invested in a Calgary market, and personally, I'm actually following his footsteps. So I'm learning from him, because he already purchased a pre-construction, and it made sense to me, because he can get a like detached home with a basement suite for 680, 700, something like that, which can still cash flow. Only problem is the vacancy rate is like 15%, something around that right now. But there is predictions that it can go down. So if you can afford a home, and if you can hold on to it for a couple of years with that 15% vacancy rate, considering that, um, then I feel it's a good buy and hold strategy. So moving on to the next question. Hope I'll definitely make a video soon about Calgary market. I'll be definitely going. Just trying to find a time, man. That's a tough one. Sticker Aditya, I think Ujwal is referring to today's federal budget announcement about new types of saving accounts that can be used for buying. New type of saving account. I know, say TFSA saving account. Um, probably I don't know what's the new type. Maybe I'm not up to date. Please put a link in the description, link in the comment. I would like to see what you're referring to. Maybe I didn't get a chance to catch up onto that news. So please put it in the comments for the link. Still, I'm not aware of it. So if you are aware, let me know. If anyone know about this, what Srikar is talking about, please let us know in the comments so that we all can learn. Personally, I haven't got to that news yet. Moving on to the next question here. Ola, what is your thoughts on unsecured line of credits? My wife will not sign for a HELOC. Will lender give me? My credit is 760 and good income. So first of all, what's the difference between secured line of credit and unsecured line of credit? So secure, it's secured through some investment, real estate. Generally, it's a home equity line of credit, means like it's secured to your home. So based on your equity in the property, based on your property value and your current mortgage, how much equity you have, they give you a line of credit. So that's a secured one. Unsecured, not tied up with anything. So generally, if you have a good credit score and you have a good income, you don't have too much debts, then generally you will qualify for a good amount of line of credit, probably like unsecured 50, 60, 70,000. But check with whichever the bank you're with. Generally, as far as I know, good banks, RBC and I believe TD, they are the good one for give unsecured line of credits. But again, hey, check with your banks. You should be able to get, most likely, unless if you have some crazy debts. But I'm sorry to hear that your wife is not willing to sign on HELOC, because HELOC is the best one, because your interest rates are much lower, especially if you have equity in your home, which is very helpful, unless if you don't spend on them on liabilities. That's the only suggestion. So yeah, definitely unsecured line of only sorry, let me take a step back. One thing with secure and unsecure, you cannot use them for down payment. Generally, most of the lenders don't allow to use the unsecured line of credit for down payment purpose. As of now, still most of the banks allow, so they do allow the secure line of credit for down payment purpose. So if you're looking to invest with the line of credit, then secure line of credit is what you're looking for. Unsecured doesn't allow, but unsecured will allow in a way, like I purchased a property. Now I want to do some improvements so that I can refinance the property and take my equity out. That's where you need money for short-term basis. You can use the unsecured to do that. Or that you want to invest in some private mortgage or whatever, private lending or something, where you can get higher interest. Unsecured, probably you pay like 6% or 5%, something like that. It's more than the secured line of credit, 2-3% more. Secure is like around 3.5 or 3.2 something, prime plus 0.5. That's what I'm getting from RBC for my primary home, which is around like 3.1 or 3.2, something like that. And unsecured is like 6. So unsecured has higher interest rate. But if you know that there is like some great investment where you want to do, you want to pay for that investment that is going to make you 20% returns or 15%, then hey, why not borrow from here? But be careful, because that's again a debt. And if the prime rate goes up, if the interest rate goes up, even your interest here will be going up. So just be careful in that terms. Moving on to the next question. Srikar, budget 2022 proposed to introduce the tax-free first home saving account that would give you prospect first-time home buyers the ability to save up to 40,000. Wow, that's a good news. So tax-free saving account, which is like, I have to read more in detail, but that's a good news for a lot of first-time home buyers. If they allow for tax-free savings, yeah, why not take the advantage of it, especially when you're working towards your first time home. Definitely I'll read more on it. Maybe I'll talk about that in the next future lives. But yeah, thank you, Srikar, for that point. Anyone who is in that first time home buyer boat, definitely look into it. It's a very, sounds like helpful information. Moving on to the next question. Bridge Patel, how is the market in the Lakeshore area in coming years for detached homes? Hey, Bridge. So first of all, Lakeshore is one of the nice neighborhood in Windsor. A lot of people love Lakeshore, especially locals. And also I see a lot of Indians, Punjabis especially, of the Lakeshore. It's a beautiful community. Even personally, I love the neighborhood. So when you see people move towards that neighborhood, and when you see a lot of new constructions happening, especially I'm seeing, like, a lot of new constructions happening in that area too. So I see there is a good potential for that neighborhood. Moving on to the next question. So guys, it's almost 7:56. So I'm gonna stop in next 5 minutes, so I'll do my best to answer as many questions as possible. If I couldn't get to your question, please forgive me, and I'll promise, we'll do this live every week, every Thursday 7 p.m. So please come back with your questions again. And that being said, if you're specifically looking to get help in Windsor, Essex, in and around Windsor, don't forget that, me and my team, we are professional real estate agents here. We are more than happy to help you guys. Jump on a call, see how we can help you. If you're looking to sell, invest, buy, anything, we are here. So don't forget that. And I'll put the contact info in the comments, phone number and email address. Give us a call. My assistant will schedule an appointment with either with me or my team, depending on the availability. So we'll be more than happy to help you guys. So just a shameless promotion, because in order to survive in this business, we got to do our promotion. So moving on to the next question here, Tarun, how can I believe that lender B or lender A or and CMHC to give me mortgage for buying second home if we put 5% down in Windsor in student area? So there is no one straight answer. One thing I strongly recommend is write a conditional offer upon financing. Give like 5 business days so that you can present the deal to the mortgage agent. So sorry, the mortgage agent will present to the lender, and he will give you the confirmation, because especially this situation what you're talking is a very question markable. So don't write no conditional offers. That's my strong suggestion. Moving on to the next question here. Can I say my sister-in-law and family moving to Canada, and we will be moving there with them until they are settled down, and we'll be continue to work from home? So first of all, you're saying that your sister-in-law and family moving to Canada, that means they haven't moved. So when they haven't moved, there is no assurance that you will be moving in, and we will be living there with them until they are settled down, and we will continue to work from home. So taking the sister-in-law and family aside, if you have work from home option, if you are planning to move into that house, then you can give it a try. But when you're referring to student house, student area, that's where the red flag I'm talking about, Tarun. So again, I'm not discouraging you. I'm just saying take that extra caution, because I personally have a lot of hard time for many clients, especially in that area, because the underwriters are very smart nowadays. They can Google the address, they can see what type of properties they are, they can sense what you're trying to do. Especially if you're genuinely moving in, it's a different story. If the property is vacant, no lock boxes, and clearly it's like 3-4 bedroom house, like looks like a nice family home, then you have a good chances to move, to get the approval. If you have a work from home option, if you have that letter from your employer, if you and your wife are genuinely moving in. So just be careful with that. Just get conditional offer and talk to the lender. I don't want to give an answer yes or no. Let the lender give you that approval. Until then, don't remove your conditions, because you have a high risk. Moving on to the next question here. What can I do if they cannot show sustainable income and they have down payment of the property? So again, that's a question for mortgage agent. Generally, if you don't have a sustainable income, A lenders will say no. There might be some B lenders, based on the interest rates, based on different criteria, based on your personal profile, your credit score, so many things. There might be some lenders, B lenders might do the mortgage for you. So always don't just take one lender's answer as no. Go talk to different mortgage agents, because there are different smart mortgage agents who can present the profile in a different way. Like they can say this guy is pretty solid, only thing is they don't have income right now, or maybe they are self-employed, they're not taking all the income, they're just putting some income in the corporation. So whatever the case is, so if you have a good mortgage agent, they might be able to help you presenting it to the right lender who can approve you for your situation. So I would say find a good expert. If you're looking for in the Windsor Essex area, reach out to my team. We'll be more than happy to connect to you with some experts in this area. Moving on to the next question here. Gil22 family, love the name. Hi Aditya, I'm Gil from Toronto. I love your videos. Thank you so much. My question to you about Windsor outstrike areas like Leamington, Kingston, Kingswell. What are your thoughts about those areas for buying a home? So, my question is like, what's your purpose, right? If you're looking to move, you have a work from home option, or you have a self business or whatever, then yeah, there are great neighborhoods. Like there, personally, like Kingswell, great neighborhood. There are some great neighborhoods, like where some of my white friends who love that area for some reason. But again, I haven't lived there. I don't have any investments in that area. I know, like in general, Livington is like a lot of farming in that area. So a lot of, like, even cannabis in that area, like a lot of factories that have vegetables, and so there is good amount of jobs there. So they are decent neighborhoods, but you got to look at what's your personal reason. If you're looking for investment in specifically, yeah, there is nothing wrong. Like Leamington has definitely like low vacancy rate. I don't know much about Kingswell, and I heard it's a great neighborhood. So moving on to the next question. Yeah, so this is the contact info that you can reach out to us. So on the screen, you can see the info. Next, moving on to the next question. Hey, great info. But I just moved to Canada, Ontario, and you crashed my hopes. What? What did I do? What did I do, brother? How did I crash your hopes? Sorry if I mean in a negative way, but sorry if I said something wrong that didn't impact you. But please let me know what's your situation, why you think I crushed your hopes. Unless if the government, the recent update about foreign buyer tax crashed you, then I'm sorry, that's not in my control. Vasudevan, is it best time to sell house in Windsor? Again, it depends on your personal situation, right? Definitely, we have seen some great returns, because if you have purchased like 2 years ago, 3 years ago, or you have made a good return, like right now, most of the people who purchased like 1 year ago, even 1 year ago, right? The price increase in last 1 year is 30 to 35%, which means if you put 100% down, like 100,000 down on a 500,000 property, there is a good chance you can sell that property for 650. Again, I'm just giving a rough number. So that means you made 100% return on your money within 1 year. That's like insane returns. I just made a story yesterday. If you guys don't follow me on Instagram, man, I make a lot of stories. Some of them are fun ones, some of them are informative. I'm very active in there. So it's the same name, Aditya Kumar Soma. Go follow me on Instagram. You can see more regular updates, everyday updates from me. So again, one of my client, he bought a turnkey duplex exactly year and 1 month ago, and I sold that duplex just a few weeks ago, and literally he made like 125% return on his money after his expenses, after the realtor fees and all. 125% on his money, which is like crazy returns. And now they're investing that returns in something else. They have personal things, like their personal goals has changed. So it depends on your personal goals. So especially if you're talking about Windsor, right? So send us an email or call us during the working hours. I'm more than happy to jump on a call one-on-one, discuss about what's your situation and what you can get from your property. What's your expected potential value, what can you get, and you do your calculations, and if it makes sense, then sell. So guys, again, it's already 8:05, so it's time for me to hit the gym, because again, lately I've been doing a lot of workout in the evenings. So that's something working out very well for me. But guys, thank you so much for joining. We'll do this live again and again. And any help you need in Windsor, don't hesitate to reach out to us. Yeah, that's pretty much it. And guys, at the one last thing, a quick update. We have a couple of off-market deals right now, especially if you're looking for a student rental. We have like a one property that has like 9 bedrooms and another property like 6 bedrooms. Good cash flow. send us an email on the email you see on the screen. Send us an email. Again, it's no bidding wars as of now, unless if it goes onto the market next week. But if you want to get the information before it goes onto the market, send us an email. We'll be, send you the information. Maybe we can see if we can help you with that. So with that, thank you so much, guys. Have a wonderful evening. See you on the next live.